Good evening. This is a two-part speech. One part is to the Tulsa Real Estate Fund investors, and the second part is to the SEC, or United States Securities and Exchange Commission. This will likely be my last speech regarding the Tulsa Real Estate Fund. The ball is now in the hands of the investors and the SEC to respond. Given that, the first part of this speech is to all TREF investors, encouraging them to file a complaint with the SEC. Considering the lack of transparency and the lies at the September 5th town hall meeting, the best path to the answers we desire and the best form of accountability in this matter will be the United States Securities and Exchange Commission. The second part of this speech is to the SEC to help them understand our top 4 claims against the fund and present the 222 pages of evidence we already have in the most organized way possible so that they can move swiftly. Just to be clear, a claim is not a false accusation. A claim is something we believe is happening that doesn't seem right, and we would like to understand and investigate. The claim may come back as false, and that's okay, but we as investors have the right to ask questions if the information we have is not adding up. All of this information can be found at www.tulsarealestatefraud.com. Please share this with any TREF investors you know, because we have no other way to organize the 15,000 of us except through social media. And thank you in advance. I'm going to turn off my camera now because this is not about me. This is about the information to be presented. Dear TREF investors, I will no longer be addressing Jay Morrison directly. At 6:48 p.m. Eastern Standard Time on Tuesday, September 5th, 12 minutes before the TREF Town Hall meeting at the Legacy Center, Jay Morrison sent me a cease and desist letter. This was an attempt to silence me as the leading advocate on behalf of the 15,000 investors just before a critical open mic meeting that my voice initiated via 2 long-form speeches I did on YouTube. You can find both of those speeches at these links. Below is the email and beginning of the cease and desist letter. You can see that on September 5th at 6:48 p.m., I received an email from his lawyer, Frederick Layer, explaining or submitting to me a cease and desist letter. And the beginning of the letter is as follows. Notice and demand to cease and desist. Dear Mr. Gordon, I represent the Tulsa, instead of Tulsa, Real Estate Fund, including in connection with your recent attempts to disrupt the business of the fund and besmirch and slander the fund by making baseless and unsubstantiated allegations based upon faulty suppositions regarding transactions in the fund. You alleged to TREF partners that there was fraud and self-dealing in the sale of the property at 3900 DeMooney Road, South Fulton, Georgia, and that Jay Morrison surreptitiously used limited liability companies to hide the alleged fraud. Your rash, erroneous, and false depiction of the DeMooney Road transaction and your attempt to misrepresent inconclusive documents as material facts is irresponsible and completely without merit. So that's the beginning of the letter. It seems as though Jay Morrison perceives any level of accountability as slander or defamation of character. My statements were not personal. They have been strictly about the fund's poor performance and certain transactions like the purchase of his personal residence through the fund. Public accountability is not personal attack. My claims are not unsubstantiated. They are valid questions based on the evidence I've gathered in this 222-page Google document from documents obtained from TREF's SEC filings, the Georgia Secretary of State, the Fulton County Assessor's Office, and the Georgia Clerk's Office, in addition to the TREF website. If there was true transparency as investors, we would not have to dig for these documents to try to piece together TREF's various transactions that don't make sense. At the town hall meeting, when asked, why isn't Jullien on stage with you, Jay Morrison responds and said, I don't know. You can see the clip here.
In the building. I just don't know. Okay. He is. All right. Somebody's statement. If you need help, work with the brilliant minds like Jullien. Why is Jullien not on stage with you? I don't know. Okay.
You saw the blatant lie. That was a blatant lie. He knew that he sent me a cease and desist letter, and he is lying to the public. In the September 8th follow-up email, he also lied, stating, note, I would not request or expect a TREF partner to cease and desist asking questions, offering critiques, or even filing complaints. As a regulated entity, the fund was formed and established on the principles of accountability. We only ask and respectfully demand to stop to individuals making false, defaming, accusatory, and unfounded statements about me, the fund, and its operations. This was our goal, to allow everyone an opportunity to respectfully dialogue so that we can move forward in unity, leveraging our 5 years of progress on a lifetime mission to do the unthinkable. And this was signed by Jay Morrison. So as you can see, he is comfortable lying in public. If that's not a lie, I don't know what the definition of a lie is. According to the dictionary, an accusation is a charge or claim that someone has done something illegal or wrong. It is not a final judgment. It is only a false accusation once it has been proven false, not beforehand. And even before escalating to the word accusation, I simply laid out questions for the fund manager to answer to help investors get clarity on what was written in the SEC filings. The verbal answers from the town hall meeting were not satisfactory, and no visual proof of anything was provided until the September 8th, 25-page PDF recap was sent. And even that document did not supply us with everything we requested in advance. That document can be found here. You click here and open it, and you'll find that document that was sent by the Tulsa Real Estate Fund. All right. By the way, I never received the September 8th email and recap. Another investor had to share it with me via our Facebook group at facebook.com/groups/TREF Life, which we had to create because the fund shut down the original Facebook group on January 17th, 2022, just before some of the transactions in question began. I've not unsubscribed from the fund's email list, so it appears that I've been removed from TREF communications. I want to be informed. And here is my email. You can see info@tulsarealestatefund.com. And I got the email about the live stream for the September 5th town hall. I have not received the email with the recap. Nonetheless, listen to me very carefully. The cease and desist letter was a blessing in disguise, family. God works in mysterious ways, and no weapon formed against us shall prosper. One, the ploy to silence me, the person who was most prepared to challenge Jay Morrison, revealed to many investors who and what we are dealing with. As you saw in the above video, he has no issue lying publicly. The rhetoric about radical transparency was not in alignment with that action. Two, I did not intend to speak at the meeting anyways, because this is not and cannot be positioned as a Jay Morrison versus Jullien Gordon debate. This is about the Tulsa Real Estate Fund's management team versus the 15,000 investors. The 15,000 investors who actually supported the management team, who pay the management team. There's no reason we should be in opposition. This was an opportunity to display our unity as investors by having other investors educate themselves and advocate for themselves by speaking up at the mic. Three, we obtained more evidence. Listen to this. We obtained more evidence to support our claim on video by simply allowing Jay Morrison to speak. He will be bound by his own words, not anyone else's. It's one thing for an SEC filing to state something. Though he has to sign those filings, anyone could have wrote it. It is another thing to see and hear the words come directly out of the mouth of the fund manager and have it recorded for the public and the SEC to see. Four, over 30,000 people have watched the replay of the town hall meeting at this YouTube link, which is likely more than the number of people who have actually read the SEC filings. This allowed us to reach more of the 15,000 investors. And based on what I've seen in our Facebook group and emails I've received, this has resulted in an influx, a positive influx of complaints filed to the SEC by investors, which is a huge win for us. People have been asking me, what are we going to do next? We know that the court of public opinion is not legally binding. This case won't be judged by online influencers, investors, myself, or Jay Morrison. Since fiduciary duty is subjective, only the SEC and other governing authorities will determine if the fund manager, Jay Morrison, violated his fiduciary duty to us or not. Our number one strategy as investors is to file complaints with the SEC to get on their radar. The step-by-step instructions on how to file your personal complaint are here. You just click this link. It'll take you up to that particular part of the document. And there are image-based instructions on how to file that complaint. Do not copy my answers. The SEC wants to hear from us and our unique perspectives, not copy and pasting of the same exact answers. So I want to be clear. They reached out to me and let me know that. All right. So moving forward, I want all investors to be aware that legally, the SEC will not announce if or when they start an investigation. And of course, neither will the TREF leadership team. So we may be in the dark for a short while, but do not lose faith. Rest assured that God is working things out in the unseen. Remember that their first investigation between March 7th, 2019 and May 27th, 2020 took 14 months. Do not lose faith or let up off the gas. Please keep filing your complaints until they can't ignore us. I'm also fully aware that even with our overwhelming evidence, the SEC may decide that even though some transactions are in the gray area, that Jay Morrison still may be in alignment with his fiduciary duty. And that's okay if that's what they decide. But we as investors have the right to ask questions, ask for proof, and hold our fund manager accountable regardless of the outcome. I want to celebrate all the investors who have filed their complaints. I've received your emails and messages showing your submission confirmations. Every submission helps our cause and our case. If you are an investor and you have not filed your complaint to the SEC yet, please do so now. Your complaints are important no matter how big or small you invested. Jay Morrison is banking on all of the $500 investors to chalk it up as a small loss and not care. No, you worked hard for that money and entrusted him as steward over it, and he has squandered it. The more details and specific evidence we provide, such as you never getting crucial emails from info@tulsarealestatefund.com, you never getting your K-1, you never getting your dividend check, you never hearing back from customer support, you never hearing back regarding a redemption request, etc., the better. The SEC doesn't just need to hear from me as the lead investor. They need to hear from all of us and the impact this experience has had on our lives. Anyone who thinks that they are above the law ultimately gets taken down by the law. This is the end of my address to investors. Now I will turn my attention to addressing only the SEC to present, 1, the evidence we have accumulated, 2, the outstanding questions we have, as well as follow-up questions after the town hall meeting, and 3, the documents and proof we are requesting from the fund. We want this to be in the clearest way possible so that their job is easy and that they can make a determination as quickly as possible. The following is what I submitted through the SEC system at www.sec.gov/TCR, which is the best way to communicate with them. Again, the step-by-step instructions on how to file your personal complaint are above. Okay? So now I'll be speaking to the SEC. Dear SEC, my name is Jullien Gordon, and I'm the lead investor in the Tulsa Real Estate Fund at $40,000 invested. The goal of TulsaRealEstateFraud.com website and Google document in this particular speech is to lay out our evidence, questions, and frustrations as investors to make your job as efficient as possible. We know that the court of public opinion is not legally binding. This case won't be judged by online influencers, investors, myself, or Jay Morrison. Since fiduciary duties is subjective, only the SEC and other governing authorities will determine if the fund manager, Jay Morrison, violated his fiduciary duty to us or not. Our ask is simple. All we are asking as investors is for you to investigate the fund again to see if the fund manager violated his fiduciary duty, especially in regards to the purchase of his personal home at 3900 DeMooney Road, South Fulton, Georgia, 30349, intermingled with the larger transaction the fund did. We know that your initial investigation of the fund between March 7th, 2019 and May 27th, 2020 led to no findings. But based on the fund's SEC filings since then, we have reason to believe that there have been violations of the manager's fiduciary duty, and we would like to present the evidence we have discovered and allow you to make the final judgment. We believe that the fund's poor performance goes beyond simply poor management, COVID-19, and distractions from public slander. Based on our understanding, these are the definitions and lines we would like explored and investigated regarding several transactions between the fund manager, his wife, and other companies he owns. Fraud, wrongful or criminal deception intended to result in financial or personal gain. We believe that the purchase of his personal residence applies to that. Fiduciary duty, the legal responsibility to act solely in the best interest of investors. There are several transactions that we don't believe align with the fiduciary duty. Bad faith, intent to deceive. You saw above that he lied directly to investors about my presence at the meeting and why he didn't know, and there are many other lies in the town hall meeting. Material violation, the act of failing to accomplish a requirement of law, and gross negligence, a person's conduct where an act or failure to act creates an unreasonable risk of harm to another because of the person's failure to exercise slight care or diligence. To ensure that no funds are taken from the fund to defend himself against our complaints, we want to reiterate what is written in the operating agreement. This case is different than the fund manager's other personal cases involving slander and defamation of character by non-investors. The fund manager must defend himself from his own pockets, not from the fund's funds, unless it is adjudicated in his favor. The operating agreement reads as follows. The manager will be fully protected of indemnification by the company against all liabilities, losses suffered by the manager, including attorney fees, costs of investigation, fines, judgments, and amounts paid in settlements, actual and reasonably incurred by the manager in connection with such action, suit, or proceedings, by virtue of its status as manager with respect to any acts or omissions, except, key word here, except that expenses incurred by the manager with respect to claims for fraud, breach of fiduciary duty, gross negligence, bad faith, or material violation of the operating agreement shall not be advanced to the manager unless it is adjudicated in its favor. So this must be funded. His defense must be funded from his own pockets, and we want to verify those transactions in regards to any legal fees that he may incur. In this Google document, we have over 100 questions we would like you to investigate on our behalf, since we were not able to get clear answers at the town hall meeting. Okay. And so the fund manager addresses some of them at the September 5th town hall meeting. You can find the replay of that meeting at this YouTube link, and you can find the fund's 25-page town hall recap PDF here in this Dropbox folder. We are not satisfied with the answers given at the town hall meeting, and no visual proof was given until the 25-page document was sent on Friday, September 8th, and even that is not satisfactory to us. The documents we requested in advance of the September 5th meeting included the current cash balance as of today. He mentioned that it was sub $500,000. Anybody can pull up their bank statement and see what their cash balance is. He would not give us that information. The 2023 income statements and balance sheets. Any kind of fund of this nature should have an accounting software and be able to pull up a year-to-date report immediately, even if it's unaudited. Proof of the $2 million SEC compliance budget that he stated. He said he's put $2 million into compliance, right, of the fund's money, and we don't believe that. We'd like to see verification of that. And we know that a lot of stuff is lumped into the GMA expense. We want to see a visual chart of all entities, including Jay Morrison's personal entities that have interacted and engaged with the Tulsa Real Estate Fund. We want to see employee compensation by year and org chart. He said that employee information was personal. We do not need the employees' names, but we do need to see particular titles and the pay grades for those titles in the organization chart. We need to see vendor payment by year, since the GMA, General Marketing and Administrative Expense, is so general. Now, he said that there are some vendors that are giving him a competitive advantage, so he does not want to disclose that. We don't need vendor names. Well, actually, we do need vendor names to verify that he is not in relationship with any of those vendors. So even if that is the reason why he will not share that information, we are requesting it as investors. Then we want to know, what assets does the fund actually own? We want proof of rental payments from his various entities to the Tulsa Real Estate Fund, as well as the use of podcasting studios by his wife, by the Big Brothers Anonymous, by the Black Wall Street Ball, by the Credit to Cash Flow game show. We want to see proof of actual rental payments for use of the larger media space. And we want to see transactional funding decision sheet. They said that they've underwritten over 200 deals. Only about 25 have actually been funded, and we want to know why certain deals were not funded and money wasn't circulated to them and through them. Okay. None of these documents have been provided. He said that they may be provided at the investor day, but he did not mention a date for the next investor day. Since the fund manager has not supplied us with the answers to all of our legitimate questions with the appropriate proof, we are asking that you investigate them or ask them on our behalf. Our top 4 claims that we would like you to investigate. Okay. The Tulsa Real Estate Fund's company formation agreement states the following regarding the fiduciary duty of the manager, and that document can be found in the Edgar SEC database. 6.9, fiduciary duties of the manager. The fiduciary duties of the manager owes to the company and the other members, include only the duty of care, the duty of disclosure, and the duty of loyalty as set forth below. A member has a right to expect that the manager will do the following: use its best efforts when acting on the company's behalf, not act in any manner adverse or contrary to the company or its members' interests. We think that that has been violated. Not act on its own behalf in relation to its own interests unless doing so is in the the best interest of the company and is fair and reasonable under the circumstances. We believe that has occurred with the purchase of his personal residence. Exercise all of the skill, care, and due diligence at its disposal. In addition, the manager is required to make truthful and complete disclosures so that the members can make informed decisions. The manager is forbidden to obtain an advantage at the expense of any of the members without prior disclosure to the company and its members. And we believe that the purchase of his primary residence was not disclosed properly. 6.9.1, the duty of care and the business judgment rule. Just as officers and directors of corporations owe a duty to their shareholders, the manager is required to perform its duties with the care, skill, diligence, and prudence of like persons in like positions. The manager will be required to make decisions employing the diligence, care, and skill an ordinary prudent person would exercise in the management of their own affairs. The business's judgment rule should be the standard applied when determining what constitutes care, skill, diligence, prudence of like persons in like positions. I don't think there are many fund managers in the entire country that have ever bought their personal residence intermingled with a deal that the fund is doing. And so we believe that this has been violated. 6.9.2, duty of disclosure. The manager has an affirmative duty to disclose material facts to the members. Information is considered material if there is a substantial likelihood that a reasonable investor will consider it important in making an investment decision. The manager must not make any untrue statements to the members and must not omit disclosing any material facts to the members. You just saw him make an untrue statement to me on video, and he did not disclose the purchase of his primary residence through the fund. The manager has a further duty to disclose conflicts of interest, like buying your personal residence, that may exist between the interest of the manager and its affiliates and the interest of the company or any of the individual members. I believe that the following 4 claims violate the fiduciary duty of the manager listed above. Our first claim is that the manager may have purchased his personal residence at 3900 Jullien using the fund's money and structured the deal for personal gain. Jay Morrison may have used TREF funds to buy his personal residence in cash at 3900 Jullien Road, South Fulton, Georgia, 30349, Mass through, an anonymous LLC, and then refinance that residence, potentially using TREF funds at an undisclosed interest rate, which suggests fraud or for financial or personal gain, violation of fiduciary duty by not disclosing his personal interest in this transaction, like he properly did for 862 and 875 Parsons. It also indicates bad faith, intent to deceive, and based on the definitions above. The property in question is 6 West 1 and 6 West 2. Notice that this is the only property on the website below at tulsarealestatefund.com/portfolio that does not have an address. This was his intent to deceive or to hide information. The official address for 6 West 1 and 6 West 2 are 3878 Jullien and 3900 Jullien, or the other way around, however the fund decided to name them. Here is the timeline of this particular transaction. This is what we put together as investors. You can enlarge it by clicking on this Dropbox link, and I would like to take a moment to walk you through it. All right. So here you have the timeline from July 5th to May 31st. July 5th is when 3900 Jullien LLC is formed. May 31st is when that property actually went into Jay Morrison's personal name. Now, how it was disclosed in the SEC filings was that 6 West 1 and 6 West 2, in July of 2022, the company invested approximately $960,000. Why would you need to approximate anything when we're dealing with actual real estate numbers for 2 adjacent properties in Atlanta, Georgia? This purchase is part of a plan to secure controlling interest in 32 acres of land to either develop the property or resell for a profit. On September 20th, 2022, the company restructured the property's capital stack by selling one of the parcels for $875,000, consisting of a refinance of $637,000 and a cash payment of $238,000. The company now retains the first right of refusal for all development rights to the property sold without the expense of ongoing debt or carrying costs associated with long-term holds during pre-development periods. So this is very convoluted. The 2 properties ended up being $150,000 and $850,000. So that's $1 million, not $960. So where's this other $40,000? It makes it sound as if the company actually refinanced the property. What would happen was that Jay Morrison actually got the property, right? The company did not refinance the property based on the documents that I'm going to show you, right? So the real big question is, why didn't Jay Morrison just buy 3,900 Mooney on his own without going through all of this, given he earned so much in management fees? That's the real question at the end of the day, because he was trying to hide something and actually use the fund's monies in order to acquire his personal residence, right, for his personal gain. So here's how it worked out, and here are all the documents to prove it. I actually have the folders laid out for you so you can see these documents in larger form. So on July 5th, 2022, 3,900 Mooney LLC is formed, right? Here is the formation documentation from the Secretary of State. The Georgia Secretary of State says that Jay Morrison is the organizer, but we needed to see who actually owns 3,900 Mooney LLC. Is it Jay Morrison or the Tulsa Real Estate Fund? And the other SPEs or special purpose entities, Tulsa Real Estate Fund was the actual organizer. In this case, Jay Morrison was. So we actually don't know if Jay Morrison or the Tulsa Real Estate Fund actually owned 3,900 Mooney LLC at this time, and that company has also been dissolved. Okay. July 27th, 2022, 3 weeks later, 3,900 Mooney LLC buys 3,900 Mooney for $850,000. This is from the assessor's website. Okay. If Jay Morrison owns it, where did the $850,000 come from? We would like to see that transaction. The SEC filing says that TREF bought the 27 acres and a house. Can we see that transaction and that transfer from TREF? How does this deal benefit TREF? It seems like the pros of this deal actually benefit Jay Morrison more than it benefits the actual fund. And the here is the limited warranty deed of the purchase. This is the limited warranty deed found on the Georgia Clerk's Authority website. Okay, August 4th, 2022. This is where it starts to get really funny. South Fulton Rentals Group LLC is formed anonymously in New Mexico. Okay, so a company is formed in New Mexico anonymously. Jay Morrison at the town hall meeting said that he has interest in this company. So Jay Morrison forms an anonymous LLC in New Mexico soon thereafter, a week later, that he owns with Trebor Smith, who later signs. Anonymity is only used to hide something. Who was Trebor Smith? At what point did Jay know that he was going to be buying his personal residence, or that this would be his personal residence? All right. And so that documentation is there, and Trebor Smith's signature is on some of these future documents. So 2 weeks later, on August 19, 2022, 3,900 Mooney LLC quick claim deeds 3,900 Mooney to South Fulton Rentals Group for $0. So now the Tulsa Real Estate Fund, if they own 3,900 Mooney LLC, if we own 3,900 Mooney LLC, has given the $850,000 property over to South Fulton Rentals Group for $0. So Jay has now taken an $850,000 asset from the company for free. Okay, Trebor Smith is the one who signs on behalf of South Fulton Rentals Group LLC, because Jay did not want to disclose his identity for the purchase of the 3,900 Mooney. Can't be really called a purchase because it was a $0 quick claim deed. So now the fund seems to have bought this property, and now this other entity, anonymously owned by Jay Morrison and Trebor Smith, now actually have the deed to the asset that had no debt on it. There's no public documentation of any money exchanged for this sale. So TREF transferred ownership of 3,900 Mooney to Jay Morrison for $0 2 months before July 27th. Okay, he could get financed on September 20th. Where is the documentation of this $850,000 2-month bridge loan? That's what this appears to be. It appears to be a 2-month bridge loan for $850,000. Is the 2-month hold the reason he paid $25,000 over the $850,000 that TREF acquired the property for originally? We need proof of these transactions. $850,000 borrowed at 12% for 2 months is $17,000. So Jay paying $25,000 more was not him being generous to the fund, right? That was just him actually accounting for the 2-month bridge loan. What did 3,900 Mooney appraise for when Velocity Capital gave the mortgage on September 20th? So again, TREF has now bought a property that Jay appears to know that he was actually going to take, and they are holding, or we are holding, the property from July 27th until September. We transfer the deed to Jay Morrison with no money exchange a month later, right? So basically he has the property for free at this moment in time. And then a month after that, on September 20th, he now gets financing for that property. So September 20th, 2022, TREF sells 3900 Mooney to South Fulton Rentals Group for $875K. And Velocity Commercial Capital LLC finances South Fulton Rentals Group LLC for $637,000. Jay Morrison signs as the manager of South Fulton Rental Group. All right. Yes, he signs as the manager in this case. Trebor Smith signed over here. Jay Morrison signed here. The SEC filings makes it sound like TREF refinanced a property on September 20th, but TREF gave it away for $0 on August 19th to South Fulton Rentals Group LLC. TREF did not refinance the property. South Fulton Rentals Group LLC, owned by Jay Morrison, refinanced the property. Who paid the closing costs? Was it really a $25,000 profit for the fund? Did Velocity cut Jay or TREF a $637,000 check? If so, did Jay pay the $637,000 back to TREF plus the $238,000 in cash for the down payment out of his own pocket? We need proof of these transactions, right? And so that transfer of deed, that purchase agreement, and that deed is here as well. Then about, 8 months later, South Fulton Rentals Group LLC quick claim deeds 3900 Mooney, the property, to Jay Morrison personally for $80. For $80. So after all of this, this property ends up in Jay Morrison's personal name. 8 months later, the property ends up in Jay Morrison's personal name for $80. No new mortgage is recorded, though he said he put it in his personal name to get a better interest rate at the town hall forum. Why risk privacy for a 1 to 2% change in interest rate? Where's the new recorded mortgage in Jay Morrison's personal name? He now has the deed of that property, but South Fulton Rentals Group LLC has the debt. Does Velocity know this? Did the development rights transfer when South Fulton deeded the property to Jay Morrison? Where's proof of these rights to develop? So the original agreement between TREF and South Fulton Rentals Group was that TREF had the right to develop on this land. But now that Jay owns the property personally, did those rights actually transfer over with the transfer of that deed? So this is the main transaction that we want you as the SEC to investigate, because something looks very fishy here. All right. So all of the documents you see on the timeline above can be found in this Dropbox folder here, this public Dropbox folder. So you will see in this folder, you will see the you will see the Velocity loan to South Fulton Rental Group. You will see the TREF sale to South Fulton Rental Group. You will see the South Fulton quitclaim deed to Jay Morrison. You will see the TREF purchase of 3900 Mooney as 3900 Mooney LLC. You will see the TREF quitclaim deed to South Fulton Rental Group. So all of that is there, and you can click through the pages. The pages are as images, okay? So you'll find them there. We're just making it as easy as possible for you to do your due diligence. In summary, TREF bought Jay Morrison's personal residence and held it for him for 2 months from July 27th to September 20th. To make up for it, he framed it as a good deal for TREF, like he was doing the company a favor when the deal was too big for the company given its current cash position. The favor was paying $25,000 extra, which means nothing given his management fee, and him borrowing $850,000 of the fund's money for 2 months for free, offering TREF quote-unquote development rights without any particular future price for those rights being disclosed, which he would profit from personally when TREF is in position, if TREF is ever in position to actually develop on that land. He also framed it as favor by covering the holding costs and the maintenance during pre-development. The development rights don't really mean anything if TREF goes bankrupt. If TREF goes bankrupt, he keeps the 27 acres for himself. Who gains from that transaction? The development rights were also with South Fulton Rentals Group LLC, and it is not clear if the development rights got or get transferred when South Fulton Rentals Group LLC deeded the property to Jay Morrison. Number 3, TREF is now stuck with 5 acres of adjacent land to Jay Morrison's home that it paid $150,000 for, with a low probability of ever being developed, instead of growing that money through transactional funding, which has the fastest return according to Jay Morrison. The $25,000 in profit is a one-time gain, while transactional funding can be repeated over and over and over and multiply money even faster. So why put this money and invest it into land that has a low probability of ever being developed? Number 4, At $30,000 per acre, which is $150 divided by $150,000 divided by 5 acres, that's $30,000 an acre that TREF paid for the 5 acres. If Jay's house is next door, let's say that there's 26 acres to develop, and then there's 1 acre, which is his acre and his home. The acreage Jay owns would be $780,000. That's 26 times 30, right? Because based on our purchase next door, it's about $30,000 an acre, meaning that he really only paid $95,000 for his home and 1 acre. If you take the $875,000 minus the $780,000 of acreage, right, then he really only paid $95,000 for his home. Another way to look at it is that TREF overpaid for the 5 acres just to secure Jay Morrison's personal home. Number 5, South Fulton Rentals Group LLC holds the debt to Velocity Capital, Velocity Commercial Capital, and Jay Morrison personally holds the deed to 3900 DeMooney. We are not sure if Velocity Commercial Capital is aware of that or if they had a due on sale clause. In short, we believe that the deal was for personal gain the entire time to acquire his personal estate. The documents we need from the fund to understand this transaction better include documentation of the agreement between South Fulton Rentals Group LLC and the Tulsa Real Estate Fund regarding the 2-month $850,000 bridge loan. We need proof of who actually owns 3900 DeMooney LLC. Is it Jay Morrison or TREF? 3900 DeMooney appraisal by Velocity Commercial Capital. We need the 3878 DeMooney appraisal, if there was any, since it was purchased in cash. We need the HUD-1 settlement statement from July 27, 2022 between Lo Chin Chang and the Tulsa Real Estate Fund. We need the HUD-1 settlement statement from September 20th, 2022 between the South Fulton Rental Group LLC and Velocity Commercial Capital. We need Jay Morrison's new personal mortgage if he refinanced the mortgage Velocity Capital gave to him. Gave to South Fulton Rentals Group. We need proof of Velocity Capital Commercial is aware that Jay Morrison deeded 3900 DeMooney to himself from South Fulton Rentals Group LLC if he still has a mortgage with them, or the payoff to Velocity Commercial Capital. Also note that that particular purchase agreement was not notarized. It was just signed by two people. It was not notarized, and most purchase agreements require a notary when you're transferring real property. We need proof of the $637,000 check from Velocity Commercial Capital to TREF. Was it made out to South Fulton Rentals Group, Jay Morrison, or the Tulsa Real Estate Fund? We need the $238,000 check from Jay Morrison or South Fulton Rental Group LLC to the Tulsa Real Estate Fund as the 25% down payment on 3900 DeMooney. We need to understand who Trebor Smith is, and at what point did Jay Morrison know that 3900 DeMooney would be his personal residence. We have more documented evidence below, including records from TREF website, the Fulton County Assessor's Office, social media, the SEC filings, the Georgia Secretary of State to support our claim. We ask that the SEC look further into this, okay? And so here is additional evidence from various websites that you can use to evaluate whether or not the fund manager violated his fiduciary duty in regards to this particular deal. I'm going to read claim 2 now, and then I'll leave claim 3 and 4, which are smaller claims, for you to read for yourself. Claim number 2 is that the manager may have given himself and his wife unrestricted free use of the Legacy Center for personal gain. Jay Morrison and his wife, Ernestine Morrison, may be using the Legacy Center for personal gain without paying for use of space. Jay Morrison Academy has a lease agreement with the Legacy Center for use of the second floor office space. However, Jay Morrison has been using the media space, the larger media space, which has generated the most profits for the Legacy Center, for his Credit to Cash Flow game show, which he owns the trademark to, and Big Brothers Anonymous. And we would like to see proof of payments by these entities for the use of space. Ernestine Morrison used the podcasting studio for her show It's Non-Negotiable, which has been taken off of YouTube. We would like to see proof of payment by Ernestine Morrison for the use of the podcasting studio that is on par with other people who have paid to use that studio. They both use the space for the Black Wall Street Ball. You can see those details at blackwallstreetball.com website. The website says a portion of proceeds will benefit the Legacy Center Foundation's philanthropic programming and activities housed at the Legacy Center. We would like to see the financials of that event, donations, ticket sales, costs, etc., and who controls the Legacy Center Foundation finances, and how does TREF, the entity, how do we as investors benefit from that? Are we even in position to have a foundation and be giving money to anybody at this moment in time when we have not been profitable in 5 years? The lease between Jay Morrison Academy and TREF Legacy Center filed in the Form 1K on 9/4/2020 states that the lease only applies to the second floor. You can see $3,760 a month right here, and that it applies to the second floor of the building. You can see that right here. But we believe that there has been unrestricted free use of the larger media space where the real revenue actually comes from by Mr. Morrison and his wife. And so we would like you to explore that even further. All right. In fact, you can see additional questions about those transactions here. And you can see this is Ms. Ernestine Morrison using the studio space for her podcast. You can see Mr. Morrison using the panorama wall for or cyclorama wall, or whatever it's called, for his credit to cash flow game show, right? And this is him promoting his game show at the Legacy Center. This is his trademark on credit to cash flow. So he personally owns that through Jay Morrison Academy. You can see them promoting the Black Wall Street Ball, right? The website is here. It's at the Legacy Center, right? And so these are this is the address where the August 11th Black Wall Street Ball was at. That's the Legacy Center address. So we would like these particular transactions explored, because that would be unfair to us as investors and to anybody who has paid top dollar for those particular spaces if they are using those spaces for free themselves. The other claims include the manager may have forgiven himself of exit penalty fees on the 862 and 875 Parson deals for personal gain of $12,489. And then the fourth claim is that the manager may owe the fund deferred rent for his company, Jay Morrison Academy, and more details regarding that are there. Okay, so here are all the questions we would like the SEC to ask the manager. We have them categorized. The first set of questions are regarding 3900 Mooney and the evidence that we supplied above. He answered some of those questions at the town hall meeting, but his answers were not satisfactory and showed no proof in the way that we've shown proof here. And so we would like you to ask these 14 questions to the fund manager to get real answers. We also have questions about the Legacy Center rentals, as I just showed you. We have questions about the financials. We have questions about the organization structure. We have questions about 3 particular bad deals that the fund manager has done. We have questions about the team. We have questions about the business model. We have questions about management fees. We have questions about intermingling, and we have questions about the intercompany marketing agreement. So this is our 222 pages of evidence that we've accumulated as investors that we would like the SEC to ask on our behalf, since we have not been able to get straightforward answers from the fund manager. And we know that going through the SEC is the best route for us to get to a resolution in regards to the potential violation of the fiduciary duty of the manager. And we thank the SEC for working with us and on our behalf and protecting us as investors in this particular instance. We know that you as the SEC have larger issues to work with, but we are a community of 15,000 investors, and we feel like we've been swindled out of over $11 million, and we would really love your support in taking on this particular case to see if fiduciary duty has been violated by the fund manager. With that, I want to thank everyone for watching this video. I want to educate you so that you can advocate for yourself. It has been a pleasure serving you in this way. I know that I bear most fruit by actually working with my members in the multifamily movement and teaching Rich and Righteous. I know that that's where I bear the most fruit. I've diverted some of that energy to actually focus on this TREF issue, but I would like to reclaim my energy and actually put it back into the areas where I know I bear the most fruit. And so if any questions come up, I will still be there to support via email. I'll still be there to support in the Facebook group, and I will still be researching. And if I get any information from the SEC that the investor should be aware of, I will make that publicly known. So with that, I want to say thank you, everybody, for going along on this crazy journey. I hope that we can find the highest, best resolution that works for everybody. But until then, I will talk to you later. Thank you.